So today I'm going to look at the DAX, how we traded it, or well, rather how I traded it. So you see the picture posted in the chat, and those are the trades I took. Looks crazy, but hopefully it won't look that crazy when I explain it. But I'm sure it's clear to you. I'm just doing it for the video. I'm sure it's clear to Darren. I'm sure it's clear to Doug as well. And I'm sure it's clear to Esther as well. How and why we took these trades, right?
Yeah, all looks good. Wish I was there.
That's what I thought you would say. If you were there, you would have taken it. Let me share my screen and...
Yep, I can see it.
Brilliant. So I've set it up, and this is basically set up to that point where we had the hunt signal. So, you know, today, those rules of levels to the left, you know, preparing your chart, I think I explained them in that one video, levels to the left video, and I think, and in that on that page, it's written somewhere. So we have the three things, right? Let's go to the hourly. So before we begin, you want to know, for example, if you're right here at Frankfurt Open, you want to know your levels to the left on the hourly chart. So when you go to the hourly chart, today you would have found that the DAX is actually trending. It's trending up. And it all started yesterday at midday here, when the news came out. What's his name? One of the British minister, he came out and he said that they've agreed something. Let's just call it that. So there was one side of the withdrawal agreement or whatever. The Brexit was kind of a good news. So everyone liked it, and price started going up, and it has gone up overnight as well. So this was kind of a different day. This is a day where you have trend going on. So when you look to the left, and we'll give more value to the levels to the left, the nearer they are in time. So yesterday's levels were important to us, but they were already crossed. But there were a level still. If price was to come down, then these levels would be the levels. I'm going to explain why I have these blue and yellow lines just in a bit. They don't mean anything. It's just levels from the other day that I haven't removed. So today when you, so we look at three things. The levels, the overall levels on the hourly chart to the left. So if the price was stuck here, and obviously my most important levels were these levels, like this one to the low, this one, and this one. And if price was to go up, then these box levels would be important for me, which around here was there. But today, when we looked at it, about 3 days to the left, there was nothing. So the most important level for us then would be the second type of levels that we look at, which we would go to M5 chart for that. So this is the Frankfurt Open, and you look to the left, your overnight session levels. So the overnight session is already bullish. It's all the way going up. It's trending up. So this was the level that was of importance to us. This one, and then this one. And then the third thing that we do is the pre-market, and that's one of the most important things for that. So we will do that on the 1 minute chart. So I've drawn that already. So this is the pre-market open, the Frankfurt Open. That's pre-market, 7 o'clock. That's where it starts. So I'll draw a line there. What's that price level of that? And then an hour later, we will have the London Open, which starts at here at this candle, which was a down candle, by the way. So I've marked that as well as market open. And then I want to know the pre-market range high and low. So I mark that with pre-market high and pre-market low. Now, allow me to change this bar replay. No, I don't want to exit it. Yes, thank you for reminding me. I want to actually change this to London Open. Okay, so now we are right at the London Open, and around that time is what we do the low bot. Right, one more time. Is everyone here? Well, that's everyone for us.
Yeah, I'm here. Yeah.
I am. Yeah.
Yeah, me too.
Brilliant. So I should carry on. So from that picture, you would have noticed that there is a couple of trades. There are a couple of trades on this. So as soon as the market opens around this time, I have no idea what to do. What I know is that I don't have a setup right away, apart from this pullback up. So if I were to go short, my first instinct would be to go short below this, but it's a very strong bullish candle, so probably it's going to go up. So let's see what happens, was the idea. And I wasn't looking at the 12-second chart today. I wanted to actually look at the 1-minute chart and make my decision from those. So I was ready for, if there was a micro pullback, you know, between the two candles, I would take those trades. The next minute, which is the London Open, got me in at this point, and by the time the price went to this level, I was already at break even, and price pulled back and I exited break even. And you would notice that there's a level over here. Now this level did play a part. If we go to the M5 chart, this is actually from the hourly chart. So this level from the hourly is based on these levels. It was actually printed on this day, you know, for the following day. So I'm going to remove it because this is not, this wasn't actually, I hadn't drawn it for this presentation. So these three levels, that's this level was on this one, based on this, and this was on the further left. So it's kind of, it looks kind of random, but this is what it is. It's this level, this one, and this one. So we're getting ready for this day, and so that's colored blue because this is for if price goes up on this day. And then I was looking to the left. So that previous level, which is this one, if you look at the market today, you know, when it opens, market was already above these levels. So these levels could only be considered as yellow levels, not the blue levels, you know, because they were below the price. But this is the only level that had those pivot points, you know, like different hits to the left. If you go to the left, there's one here, and one here, and one here. Price did come down to it, and this is what market usually would do. But what played more important role in this price action was not just this level, it was these box levels. So as long as price was inside the pre-market range, we were arguably not in the strong volatility breakout regions. So price comes down, hits those levels, goes back up, we are waiting. Let's go to the next candle. And as soon as this candle then finishes, price actually started going up. And so I took my second low bot entry over here, and it did go up. We could have entered on the box of this, the break of this box as well. As you can see, the pre-market open and this box level are in line. So it's a good support and resistance level, a pivot point. If you go long above this, then this would be something. The other thing that I want to talk about is if you consider this as a 1 and this is a 2, this red candle with a long tail is actually your bullish candle. It looks red, but it's actually a bullish candle because the high is actually higher than the midway of the candle. But this is just a market gyration that happens in the beginning, as we know now. As soon as the candle closes here, at this point, I'm thinking bullish now. Why? Because market is above the market open, the London Open, and it's also above the pre-market open. So this is important. You can use the session lines indicator. It's available in the dashboard. You can download it and apply it twice, one for the pre-market and one for the London Open. Or you can go to Snome's website and get a sessions indicator from there, which will give you same options on, you can have the same indicator with 3 or 4 open lines, but I use these two. So you have one line here, one here, and if price is above both of them, you're definitely in the bullish territory now. So let's go to the next candle now. What happens? Obviously, price went to the range high, right? Those levels there, and immediately goes down. And we would soon find out. Right now, we're in the future, so we know, but at that time we didn't know. Now we know that this was actually the exchange of big orders going on, and they were getting ready for what was to follow. So gets rejected, comes down. I should not have lost on this, but I think I made an entry here. So I made an entry here, which went up, and I went kind of, let's call it greed. Greed is a good thing, not too bad. I added on there. This entry was break even, so I could have added one more. So I added there. So that one turned into a -7, and this one was a break even. So a break even, and a -7. So at that time, I was sitting at probably a 1% loss. And then market went down, and as soon as this happens, price going either side of the market open, this suggests that the market open itself does not have the power. It doesn't have those type of orders that move the market. So I stepped aside and I started saying all sorts of bad words for the market at that time. Crappy markets, blah, 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 da, da, da. And around this time I was talking about, remember guys, we want the market to clear the range, and not just, like clear the range doesn't mean price just kind of grinds itself down here and then it kind of goes slow like that. No, you want what we call the volatility breakout. You want the SIP, the chaos influx. All of a sudden, volume goes up and price begins to move. That did not happen for a while. And as you can see, this level is playing its part. So even if you didn't have this level, let me just delete it. You have these levels to the left. And that's why I keep saying AIMS box. When I first coded it, I used to call it AIMS levels, because it's the levels that were important. So once you have an AIMS level on any time frame, it corresponds to many levels on the other time frames. So once you see a level, it's a pretty good thing. Like this level here, it's a level. So it will always be a level. Even if you come look at this M1 chart 20 years from now, this level will still be a level. So this is a level, this is a level, and as we can see, around this zone towards the low, market did react to it, goes back up, hits the, and this is the things that I look at, this is a bit of that price that I look at. So goes back to the market open. Let's go to the next candle. Comes down. Is this a pullback entry for you? Not really. Why? Because we don't have the volatility. We don't have that proof that there is momentum that price is moving. And so a lot of people would confuse the pullback pattern. They would just look at the pullback pattern and start trading it. It's very same thing, when people start trading the indicators. So when there's an indicator signal, they just jump on that. That's not what it is. Like, the AIMS entry alert, the dot alert. We don't just trade the dot. We start our analysis from that dot. So over here, it would look like a pullback. But what's missing in this is the most important thing, which is the volatility, the momentum, and the trend. It's not there. We are in a range. And this is, green, red, doji, green, red, doji, green, red. That's not what we want. We want something. At this point, I would have liked if the next candle was like zooms through this and then takes a pause here, and then we go. So that didn't happen. It was sideways. Some people might have taken a short here and now not very happy, doing the Giuliani at this point. You know what the Giuliani is, right? Probably not. Trump's attorney, or whatever it is, the solicitor. So price comes down. Same, those levels play the part. So if you, that's what I want to make. I want to make the point is that, you know, if you follow those rules of the levels to the left, levels from the hourly chart, level for the 5 minute, you know, yesterday's levels, the overnight range, and the pre-market. So the pre-market played a really huge part in this. Price comes back to it. It hits this level, doesn't go through. So what we would like to see is that if this type of candle was printed over here and it closed outside of that range, then we would have considered we're in a downtrend. But here it's spiky, there are loads of wicks. As you can see, closes are all the way there. So if I were to change this chart to a line chart, the line chart is going to stay all the way here because this is all the closes you're seeing. The rest of it is just rejections. Let's go to the next candle. It goes up, goes down. Kind of stays again, starts to go up a bit. Then something happens. 8:19, that's the UK time. 10:19 on the chart. This is what I look for. Because over here it was grinding itself to the bearish side. And when you see 1 wick, 2, 3, let's not count those, 4, 5, 6, 7, 8, pay attention to these. Something's happening. There is something happening. Why is price not going below this level? Because there are buy orders. What's happening? Well, there isn't enough energy in the sell orders to break that level. So what if the sellers then stop selling? What would happen? The buyers would win. And that's exactly what happened. It goes up. It goes up. Let's have a look at the volume. Look at this. It begins to go up, closes outside the Frankfurt and the London open line, but we're still in a range. Let's see what happens in the next candle. Bam. Magic confirmation. Now this wasn't really exciting at first. It was really exciting at first, but when it closed below this, you know, it goes through it, but instead of closing outside, it closed inside the range. I kind of went a little bit iffy. So because there's a big wick, I cannot go long here, right? On the micro pullback, I won't be going long. I could have gone long between these two, but at that time I wasn't really confirmed. It could easily have been one of these candles, but because it's, you know, broken, because all of this has happened, and it breaks up, touches that level, there is now some hope. This is that initial wave one that happens, and wave one would happen in the times when nobody is really keen on trading. Why? Because you know, it's going sideways, and as you can see, volume is high, price goes up, pulls back, and now the magic happens. Next candle is bearish. You might be even thinking, oh, can we do the reversal trades between range high to the range low? Not really. Why? Because the candles are too big. Something's happening. Something's happening. Let's see what happens after this. Next candle touches that level again. You can clearly see there is something happening at those levels. Something's going on. Sellers are coming in. But at the same time, you have the buyers. Now what happens? It bounces against this market open. And now we don't have a bullish or a bearish candle. It's actually a doji. It's a pause candle. It's creating that pattern that we're after. We have the volatility breakout. Well, there is no successful breakout, but we have the volatility that is bringing the momentum. So the volatility, buyers have taken the price up, sellers have taken it down, but not diminished or not completely taken ground from the bulls here. Comes down, takes a pause, one more pause, but this time you have a bullish candle, and you have the 3 candle pullback. If I were to go long, I could easily make an entry which be above all the levels that I'm concerned about. It's the pre-market high, these levels to the left, the market open, both of the market opens. My entry is now above all, and along with that, I also know that the Brexit side is going positive, and my trend on the hourly has also cleared levels to the left, and it's actually an uptrend. I'm going back to the M1. If you go long here, you will most probably catch the big move. And as we know, this is what happened. That's it. This, ladies and gentlemen, is the seed. As you can see, the low is higher than the low to the left, and the high is lower than the high to the left. So this is an inside candle. All you had to do was take your entry. On this feed, the high is 54, so your entry would be 56 if your spread is at least 1, or probably 57 if you wanted to give it 2 points above this level. So you went 57, and your stop loss 45. So 10 or 12 is your stop loss. Goes up, pulls back a little bit. This is the micro pullback. I went long there as well. Obviously, when I was long from here, for 35 pips, it went 35 point here. I took one trade off, and then I got back in here. It shows 88 here. I think mine was slightly different. And then it went another 35 point up. I took another 35 point there. And there was a little scalp in between as well. Between these 2 wicks, let me take you to the 15-second chart now. We're going to look at these 2 things. We're going to look at this, and we're going to look at this. Why I just chose to trade M1 is, see those 2 levels, the distance between the 2 wicks is 1 candle pullback. I can go long. There's an inside candle and a doji. I can go long, but that's only because price is going vertical, parabolic. It's going strongly up. I can take the first pullback, second pullback, probably not the third. But this was actually the first major pullback. This is setup 2. Let me get rid of the volume. We have a setup 2. If you look at this setup 2, and Doug, if you're listening, this is why the setup 2s are more powerful. When you trade them like this is when they are more powerful, right? You know, price goes up, clears the level to the left, pulls back, and now you have this box. If you were to go on a setup 2 above here, you're clear of all the levels to the left, making it even stronger setup than a setup 1. Now, if this was a setup 1, sometimes setup 1 would do that as well. So you'll have a setup 1 where you have a wave 3 that kind of hits the range, and then the wave 4 goes parallel sideways to the range high, and then your breakout, you know, when the breakout happens, that becomes your next wave. Often when the breakout is so strong that what you thought was a wave 3 in the past, you know, to the left, if there was a cross of zero line here, what you thought was a 3 becomes a wave 1 because your new wave becomes wave 3. So that happens with that as well. But these kind of setups where you have a breakout and price takes a pause, and then kind of gator, you know, the lines kind of go a little bit like wriggly here, and then it continues, and you have this Scooby over there. Really strong and powerful setups, and they usually happen quite a lot on the hourly charts because of how the time is. So on Forex, when you have a strong day today, then when the market kind of slows down after the banks close, you know, 5 or 6 p.m. UK, market starts to go. This looks literally like an hourly chart. Like over here, it's like as if you had a very strong day, and then market went sideways, and next day, around 7 o'clock, you know, Frankfurt Open or London Open, it breaks out. So this kind of happens quite a lot. Exactly this pattern on Forex hourly charts, and that's what I intend to trade during the next year as well. On the hourly charts, 10 pairs, would do the job. Just wait for 1 day, and usually this would be a bullish candle on the daily chart. Anyway, so that's just making different points on this. And then after this, if you miss this bit, most probably I think the best thing is to just not touch the charts, because it's going to be difficult after this. But there was a few trades available after that.
Well, ask a question, Amy.
Yeah.
That first and second pullback, you didn't look at the 15-second chart then. You were just looking at
No.
the 1 minute chart.
No. Yeah. Today I was looking at 1 minute chart.
Your stop loss, if it had kept going down, you'd just got out, I assume. At that point.
Which point are you talking about?
So the first box, for instance, you got in, and if the market had then gone down, you'd have just got out. Sorry, your little yellow box you did.
There, here.
Yeah. If that had kept retracing, then you'd have just got out, I assume, and taken a small.
Oh yes. If so, as soon as this next candle opens, let me just get rid of this. So let's suppose I got in here, right? And I wouldn't let it. I think I wouldn't have about 6-7 points. If it came down about 6-7 points, kind of, it depends on how it moves. If it spikes and comes back up, because I don't have a stop loss for this, my stop is like 15 points away, right?
Yeah.
So if it spikes and hits my 15 point, then I have a full loss, right? That I wouldn't like to happen. But if kind of like, grinds itself, starts to go down, then I get out. At that time, I sometimes would quickly look at a 15-second chart. What's it showing? How is it looking like? And I don't want to sit in it. Why? Because position is heavy. I don't want, when something like this happens, I go heavy. So I have like these 3 lot sizes calculated. So suppose when the market was here, I would be in my level 1, probably level 2 at this point, because now I know something is happening. But when something's not happening, like around over here, let me just go back a bit so the chart goes normal. So when we were in this territory, I have the level 1 lots, because I'm not excited, around this level. If I'm trading, it will be level 1 lot. Let's say quarter risk.
Okay.
But around this, now I'm seeing something. Now there's a possibility of something happening. And when that happens, I'm at my level 2 lots, which would be about 0.5% risk. But when this happens, after this, I want to benefit from it. So sometimes, because of the higher risk I actually give back the profits that I've taken here, because those were smaller profits. But this works well for me. So if I went long here, now I know that I'm going very heavy. Either I'm going very heavy, or I have gone 3 times my normal. So like if I was like, let's say 1 lot here, I would have done 1 lot 3 times. And then, so I don't want the market to go too much against me. Let's go to the 15-second chart. So this pullback, I'm long here, right, at 88. And when market is doing this, I'm actually seeing it on the 1 minute chart. On normal days, I'll be trading it on the 15-second chart. And sometimes if I'm trading on the 1 minute chart, I will probably have the 15-second chart somewhere around here. So I'll quickly have like a look at it. What I'm seeing on the M1, like this bit in between these, I would like to see what's happening to the 15-second chart. So as you can see, the wick was really small. So as soon as the price starts going up, you see the wick already, and you know that if price came back to it below this, I will get out. Plus at +5 and +6 or 7, my stop loss is a break even anyway. So if it went 5, 6, 7, I'm at break even, because position is strong. I don't want to lose, right?
Okay.
And here I did the same thing again, and sometimes it would result in getting out early. Many times, I think, on many occasions, I've done something like I go long here, and as soon as I put a pending order here, because I have a box level, I will also have a pending order there as well. So I'll have like a quarter risk here, half a risk there, or half a risk here, half a risk here, goes up, get your half a risk profits here, and instead of going in, watch the market as if I was in it, right? Or as if I'm making an entry.
Yeah.
So if it started coming down, I will get out of that position that I had here, or if it started going up, I'll let it go. So as it goes up and then it starts coming back, I'll take the rest of the profits here as well. And then after you see a very strong bearish candle like this, then you're not interested in longs for a bit. And then we have a second candle. Now, many people will consider this as a pullback. For me, it's not a pullback because now the market has, done a very strong volatile move. You want it to be part of this. What happens after that? Maybe it continues, but you can only try it if you already benefited from this. So if you already are sitting on 30, 40 points profit on this, you can probably risk another 10 here because that's your profit that you're reinvesting. So if you wanted to go long on that, did it just mess up? Yes, it messed up. Let's reload it. And reload has ruined everything.
So your risk is based on sort of roughly 15 points.
15 points, yes. 15
yeah.
points. Yeah. 15 points works. Of course, if volatility was to go high too much, then we would change that. Okay, so now we are in the current markets, and I was talking about this candle here. So I actually did go long here, and around this point, it wasn't these risks. It was actually around the first level, so probably a quarter risk. And as soon as it went 5 points in my favor, I was stop loss was break even, and I got out. Then I took this trade here because this was very, very beautifully going tight, which indicates that the buy orders that took the price up there, it wasn't, those sellers did not get out of their position. Actually, they are still in there. And so if we change this to the M1, this over here created a beautiful setup 1. So this is a setup 2 here, but it's not the first breakout out of a range. It's actually the result of, it's actually aftermath.
Sure.
We want to see this, right? We want to trade this. We want to catch this. And once this happens, after that, the chances of another one happening like this, not always high, but you would usually have this little bit follow through. And sometimes, maybe it just follows with another crazy one. At least to this level, there was quite a lot of pips in there. Let me just have a look at it. Yeah, there was quite a lot of them, probably 40 points in there. But anyway, I had a small target, 12 points, and it went up, hit the 12 points. So another lovely trade on that. And this is not a really beautiful one, but it was a kind of okay pullback. So I took this. As soon as price hit that level, brought stop loss to break even and got out break even. And that's it. Left the chart at that point. It's like, okay, that's enough. We've done our thing. So another interesting thing that I would like to talk about is so I have the DAX list. And if you look at this stock, it opened with quite a big gap. And it wasn't just that one. So this other chart, this opened with a gap as well. And Volkswagen also opened with a gap. And it went up at the London Open. Right, so around this time it was going up. And all the way till 819, this chart was going up. But the index wasn't going up. This chart over here was going up, but the index wasn't going up. This chart had opened up and coming down. So it's weird, isn't it? Some of the charts would go up, others would go down. And that's why indices become highly volatile, because they're based on price. And when price goes up and down, their values go up and down. So if you were to put all these 30 charts together, obviously what it would turn into would be this. And that's what we trade. So if somebody tells you, what do you trade? And you said, you trade stocks, you are telling the truth. You know, do you trade stocks? Yes, I trade a composite of it. I trade 30 stocks together. Probably, you know, sound a bit more exciting. Like, really? 30 charts? Yes, I trade 30 German stocks together. So, yeah. And that's how it all happened. Where's that picture? Let's bring that picture. Okay. Yeah, the hunt signal was at the 1019, 819 candle. That was the hunt 2.0 signal. So let's talk about that now. If you were to take this signal as it is, you'd have a 12 stop loss. Let's bring our favorite tool. So your stop loss will be just below this candle here. And if you trail the candles, then you got yourself 70 points. And your risk reward was 1 to 10. 1 to 9.5 or 9.45, but it could easily have been 1 to 10. Let's actually change this to a little bit higher. So let's call it 1:8. But it went as high as 1 to 12. But you can't catch that. So if you exited somewhere around here, or you had a target point of 1:10, that was hit. So that's the beauty of the seeds. If you were to take seeds and you take your trades based on, you know, you calculate your lot size based on the range of the seed, or if you just calculate your lot size based on 10 points, and you only take seeds that are at least less than 13 points, then in most cases when you catch a seed and it moves like this, you will catch at least 1:5 to 1:10 trades. So you could be like wrong 10 times in a row and then catch a trade and make it all back. So, and you won't be wrong 10 times in a row as long as you select the correct markets. Anyway, so yeah, that's that. Any questions? No questions. No Elena then.
No, nothing from me. Pretty self-explanatory, I think. Very impressive.
Yeah,
It is, yeah.
I've got a question for you, Imi. Obviously, when you talk this through with us in detail and you can like analyze it, there's all sorts going on in you're describing all sorts. But when you're actually taking these trades, is all that going through your head, or is that in retrospect that you're breaking it down? You know, or can you?
That's a very good question. Not all of it goes through the head consciously, but I'm sure it's there somewhere subconsciously, because, you know, seen that pattern so many times. Like, for example, around this minute, I was saying all sorts of crap about the market. It's like, you know, stay away from this market, blah, 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 don't trade them. This is this, you want to mark those levels and wait for them. And the next moment, bang, this happens. And I'm like, ooh, okay. And my next comment in the chat room was, I woke it up, right? Is that what I wrote something like this? I woke it up. So that analysis of, you know, knowing that this candle actually means something. I know there will be a lot of people, for them, they might have seen this candle, it wouldn't have meant anything for them. Be like, okay, it's still that same range. But then surely, if they had the pre-market highs and lows marked, which I had marked and magically removed by glitchy software, actually we can mark them again. That's what it is. We just mark them here. Bring it don't have to be precise about this. You know, it's not like a solid number. It's just a range. So it makes perfect sense, doesn't it? So if you have those levels in advance and you're looking at this, so yeah, that kind of helped. Found out as soon as it did that, all of those thoughts kind of kick in. I was like, oh, what if it goes through there? Oh, what's it doing? Oh no, it's coming back. Oh look, it's not going down further. Let's see what happens. And then all of a sudden you think, it's a pullback. All right, we can take a pullback entry. So you have an entry here, an entry here. And obviously when it breaks here, so if I didn't take this, or if I didn't take this, and this happened, around here, I would either take the micro pullback, or I would drop to the 15-second chart or the 12-second chart and take a pullback entry, which would look like this. Let's suppose if I were to go to a 5-second chart, because I don't have a 10-second chart here. Where are we now? I need to go to 835. Oh, here we go. And I can go to the 5-second chart if market moves so strong like this. Bring that to M1. Around this level. Let's put a cross there. As you can see, if I missed all of that, at least this, if I had gone away from the screen, right, and my alert was here, I'd be alerted here. And if I could make to the screen in the next 2 minutes, I caught this. If I didn't catch this, at least I caught this breakout. If I didn't catch that, let's suppose I missed all of them, and the market comes here, I'm straight away going to the 5-second or the 10-second chart and taking this pullback. And I don't really need to do that, because I can actually take it on the 1 minute. And there's a feature, if you press F9, this window comes up, the order window on MT4, and you can see the little tick chart. And that can give you those pullbacks, and you can actually see those as well. So or you can just learn to observe the price itself. So on this 5-second chart, when it pulls back here, definitely I'm long here. Now look at it, so beautiful. Another setup 2, right, Doug? Look at this.
Yeah.
Setup 2.
Yeah.
You go long there, stop loss here, and because it's moving smooth parallel with the gator, you wouldn't get out of it until it closes here.
Oh, yeah.
So it's a beautiful trade on this. But the problem is that people would get stuck to the 5-second chart and then wait there for setups. No, that's not how you do it. You want to go to the 5 or the 10-second chart only when you want to benefit from something like this. Or, you want to expand this pullback for yourself. So, for example, up to this point, you're not on the 10-second chart, but when something like this happens, you quickly go to the, let me bring that here. You quickly go to the 15-second chart. For God's sake. And if you went to the 15-second chart, you got yourself a setup 2, because that's your pattern, you understand it, you can trade it. And imagine if you just took this trade here and just, trail the candles. It was such a big winner.
Yeah. Beautiful.
Beautiful.
I didn't take it because
and,
I was worried about because of the levels to the left. I thought, is this just a false breakout and it's going to go back the other way? So I never bothered.
Ah, you went that route.
Yeah.
Okay.
Yeah,
Well,
that's how I analysed it.
yeah, it happens. It happens to me, to everyone. Sometimes you feel too negative about the market, and you miss to see this impulsiveness. Whereas for me today, at least, I was very aggressive. As soon as I saw this point here, I was very aggressive. I was like, "Ooh, that's it! It's happening." Why? Because I had done the background work. I had in the back of my head, I knew that my hourly chart was trending. Right? I knew something's happening. I knew this bit, that it's trending, and I also knew that it was waiting for Brexit. It is clear to us now that the past few days the market has been going up and down because important Brexit talks were happening, and it's affecting hundreds of small businesses, but at the same time dozens of large businesses and European markets as well. So it's a very important thing anyway. And there was some news, that positive news, and that broad stuff. And as we can see, the result is here today with us. It's moved quite a lot. And if we go to the daily chart, we have a PC pattern. Let's delete everything. I could have actually done that instead of deleting, but that's fine. We are at the overall highs of the market. So if I move the level up there, we have touched the, not the yearly, but at least the pre-pandemic highs all the way up there. So if I go to the hourly chart, you can see that the market actually hit that level. So suppose you're vigilant enough to actually have those levels on your chart. All you had to do was actually, you didn't have to have that level. You could have had the box. You know, we can use the indicator that available at 4-EXE website, SNOM's website, the fractal levels indicator that I use. And so you can have those levels. So if price is in a box on a daily chart, the box high and the box low is a level that would help you. So if I go to the hourly chart, we can see it was something around this level. So then I can refine it. That's my level from the hourly chart. I can easily see this. And when on the M1 chart, you won't see the level. You'll be somewhere hidden, but as price starts to go up, you begin to see that. And if you have a certain color to identify that level, you think, oh, all right, that's a big level. That's a huge level, because it's a daily level. So things can happen. So this would have really, really helped you actually, squeeze a few more pips out of it. Or if you were to take a little scalp here, then we know that the market has this tendency of this magnetism between these levels. So if you have like this big level, price would actually kind of almost always try to test it, because this is the mentality, the psychology of the market that keeps going. And it went there, tries to break it, and it's met by either profit taking or whatever the mechanism is, and price starts to come down. So there we go. Today was not an exciting start, but certainly an exciting end. And that is 10%. This was 10% for me. Could easily have done 10% on one entry, but I did it on two entries. One here, the next one there, my style. But if I just took the seed here, as we can see on the chart, there was the seed 2.0 indicator here. And this is the perfect one. So the hunt method, the first hunt method, would require you to wait for a new peak. There would be a peak here on the AO. But now we wait for the peak on the price instead of, so the rule was wait for the peak on AO and then wait for the dark bar, which in this case would happen here. So you have no hunt signal. But the hunt 2.0 goes wait for the peak on the price instead of the AO and wait for the pullback. And within that pullback, the indicator also checks that price is above the purple, it's above the gator, above the box, and the AO is green. And then it looks for an inside candle or a bullish pin bar here, or a bullish divergent bar, or a outside candle. We'll look for that, not outside candle, sorry, because then it wouldn't do a pullback. And then it looks for pullback. And if they're within a pullback, you have a cherry or a seed, it becomes a hunt 2.0 H2O signal. It goes long. Okay. All right. If there are no questions, then we will call it the end.
I have H20 indicators available now, is it on?
Yes, they are on your dashboard. If you go to the software tab,
okay,
you will see them there. Hunt 2.0 indicators.
Nice
Yeah.
one. Yeah, thanks, Ken. Brilliant. Good session.
All right.
Thanks.
Cheers, mate.
Brilliant.
See you
Thanks
all.
very much, Jimmy.
Before you go,
Thank you.
I added the Hunt 2.0 seed indicator onto my chart, but it never showed anything. Is there a different settings that I need to maybe have?
You probably have Do you have, assuming you have the license file and all that installed, right?
Oh, maybe that's the problem.
Yeah, license file has to be there for the hunt, the first hunt levels. For the hunt indicators, you need the AIMS, the Grant AO as well. But the Hunt 2.0 doesn't check the Grant AO, so you don't need that. But you need the license file to be installed.
Okay.
For it
I've
to
got
be
an
seen.
out of date message popping up. So is that?
That's it. Yeah, that's
problem?
it.
Okay, cool.
Just go to your dashboard and go to license file, download it. Make sure that the file name remains the same. You know, when people download the file, and if there was already a download from last month, it kind of adds a number in parentheses with it,
Right.
and then people go and copy it, and then the name is different, so it doesn't work.
Okay, cool.
You know, computers are dumb. So.
Thank you.
All right.
Bye-bye.
See you later. Bye now.
Thank you.
Yeah.